All right, let's do some questions that deal with, I don't know, audit risk, fraud risk, all that good stuff. Let's start out question number 9, Numero 9. Aber auch in Deutsch Nummer 9. Jetzt nicht sagen, cool. Hey. All right, as the acceptable level of detection risk decreases, the assurance directly provided from what should increase, decrease? So as the acceptable level of detection risk decreases. All right, so let's see what that means. Here, let's come over here. Reliance is low, control risk goes up. We want our detection risk to go down. We better do more substantive testing, which means we need to increase our test of details of accounts, transactions, and balances. So we're going to do more substantive testing. A, substantive tests should increase. True. They should decrease. No. Tests of controls. Well, again, coming back here, we're already done with test of controls because that deals these, reliance, control risk. Now we're dealing with substantive. Best answer is A. And as I said, this shows up all the time. Number 10. Which of the following audit risk components may be assessed in non-quantitative terms? So you can assess these in quantitative terms or non-quantitative. What is quantitative? Quantitative would be like I did, let me see. Remember I said audit risk. What do I want to erase? Audit risk equals IR times CR times DR. I said audit risk is 6% equals IR, which is 75%, CR, which is 80%, DR, which is 10. So you can do them in quantitative, or you can say control risk at the max or less than max. So that's quantitative or non-quantitative. So CR, DR, IR, all of them, yes, yes, yes. Correct. Answer C. Number 11, which of the following are conditions that make up the fraud triangle? So what is the fraud triangle, the fraud risk triangle? It is motivation, which is incentive or pressure, and they'll use these interchangeably. So remember all the terms. Opportunity, and this is an attitude to rationalize. So rationalization, yes. Opportunity, yes. Motivation or incentive and pressure, yes, yes, yes. Hey, how do you like your audit class with Raj Phillip? Yes, yes, yes. All right, number 12. If an auditor discovers fraud that they consider immaterial, to whom should they report this? A, report the fraud to those charged with governance. Sounds good. B, report the fraud directly to the PCAOB. No. Report the fraud to management at least one level below. No, we said one level above. And not report it to anyone if it's immaterial. It's fraud. Fraud is fraud. We need to communicate this. All right, so those are some of the class questions. Let's also turn to the task-based simulations, TBS. Now, when we look at TBS 1, it says here, uniform CPA exam. It has a work tab, audit risk, authoritative literature, help. At the top it says unsplit, split horizontal, split vertical, spreadsheet, calculator, and exit. Now, again, practice with the software so you can understand how these work. Required. Items 1 through 15 pertain to an auditor's risk analysis of an entity. Select the best answer for each. Bond CPA is considering audit risk at the financial statement level and planning the audit of toxic waste disposal, TWDs, financial statements for the year ended December 31st. TWD is a privately owned entity that contracts with municipal governments to remove environmental waste. Audit risk at the financial statement level is influenced by the risk of material misstatements, which may be indicated by a combination of factors related to management, the industry, the entity. So the management, the industry, and then the company as a whole. Required. Based only on the information below, indicate whether each of the following factors would most likely increase I, decrease D, or have no effect N on audit risk and risk of material misstatement. So audit risk, boom. Risk of material misstatement, boom. So how does it affect all this? Right? Audit risk also including detection risk. So what we want to know, does it increase, decrease, or no effect? All right. Number 1, this was the first year that they operated at a profit since X2 because the municipalities received increased federal and state funding. If you're getting increased federal money, chances are you're more closely scrutinized, they're looking at you more, that would decrease the risk. Number 2, TWD's board of directors is controlled by Mead, the majority stockholder, who also acts as the CEO. Didn't we say that if you have an area dominated by one person, that was a fraud risk factor that would increase? 3, the internal auditor reports to the controller reports to Mead. The internal auditor should report to the audit committee, not to the controller. So that increase. 4, the accounting department has experienced a high rate of turnover. That was a fraud risk factor. Increase. TWD's bank has a loan officer who meets regularly with the CEO and controller to monitor their financial performance. That's good, so that would decrease. TWD's employees are paid bi-weekly. Does it matter if you're paid every 2 weeks or twice a month? No, no effect. Bond is audited TWD for 4 years. Well, that's good, right? Because they're familiar with the client, they're familiar with the industry and business. That should decrease. Number 8, during the year, TWD changed its method of preparing its financial statements from cash to GAAP. Is that a correction of an error? Are the journal entries correct? So sounds like that increases the risk. Number 9, during the year, they sold 1/2 of its controlling interest in the United Equipment Leasing Company. The TWD retained significant interest in UEL. Is that in the ordinary course of business to sell off part of the business? No. Therefore, is it more susceptible to either a mistake or intentional? Yes, so that would increase. During X6, litigation filed against TWD in X1 alleging that TWD discharged pollutants into state waterways was dropped by the state. Loss contingency disclosures included in prior years are being removed. So we're getting rid of our contingent liabilities. That's good. Decrease. During the year, TWD signed a contract to lease disposal equipment from an entity owned by their parent company. This related party transaction is not disclosed in their notes. That's a problem. Increase. During the year, TWD completed a barter transaction with a municipality. Bartering means if you give me this, I'll give you that. TWD removed waste from municipally owned site and acquired title to another contaminated site at below market price. TW tends to service. This news sounds like a mess. That would increase. During December, the company increased its casualty insurance coverage on several pieces of sophisticated machinery from historical cost to replacement cost. Well, that's not really an audit risk or affecting risk of material misstatement. Increase 14, about the substantial increase in revenue recorded in the fourth quarter, disclosed a new policy. The company guaranteed to several municipalities that it would refund the federal and state funding paid if a municipality fails federal or state site cleaning inspection. So you're guaranteeing money back, that increases. Number 15, an initial public offering called an IPO is planned for late in the year. That would increase. All right, so not difficult. Some of it's common sense. Let's try another one. TBS 2. Green CPA is considering audit risk, including fraud risk, at the financial statement level in planning the audit in National Federal Bank, NFB, company's financial statements for the year ended December 31st. Audit risk at the financial statement level is influenced by the risk of material misstatement, which may be indicated by a combination of factors related to management, industry, and the entity. In assessing such factors, the company has gathered the following information. All right. Company profile. It says, NFB is federally insured, bank, and has been consistently more profitable than the industry average. So they're more profitable, that's good. So that means that maybe there's less risk. So we'll say that would decrease. By marketing mortgages on properties in a prosperous rural area, which has experienced considerable growth. NFB packages its mortgages and sells them to large mortgage investment trusts, despite recent volatility of interest rates. So if you're doing mortgages, interest rates are volatile, that's going to increase your risk. NFB has been able to continue selling its mortgages as a source of new lendable funds. NFB's board of directors is controlled by Smith, the majority stockholder, who also acts as CEO. It sounds like that might increase. Management at the bank's branch offices has authority for directing and controlling NFB's operations and is compensated based on branch profitability. Didn't we say that was a fraud risk factor? Yes. Risk, I'm writing myself a note, factor. Okay. The internal auditor reports directly to Harris, a minority shareholder, not majority, who also acts as chairman of the board. So he goes directly to the board. That's good because we want him to go to the board of directors. The accounting department has experienced little turnover in personnel. That's good in the last 5 years. NFB's formula consistently underestimates its allowance for loan losses. So we're understating our bad debt expense. That's not good. But its controller has always been receptive to green suggestions. That's good. Recent developments. During the year, NFB opened a branch office in a suburban town 30 miles from its principal place, although this branch is not yet profitable, so that increases risk. Due to the competition from several well-established regional banks, management believes that the branch will be profitable by X7. Also during the year, NFB increased the efficiency of its accounting operations by installing a new sophisticated computer system. Now, a new system is great, but until you're familiar with it, what is that? There's a learning curve. What does that do? Increases your fraud risk. Based only on the answer, tell us whether it increases or decreases audit risk. All right, branch management authority. So they're compensated based on profitability. In general, branch management authority increases audit risk. Government regulation, there's more oversight, decrease. Company profitability, less incentive to commit fraud because they're profitable, decrease. Demand for the product is increasing, that's good, decrease. Interest rates are volatile, bad, increase. Availability of mortgage funds, that's good, that reduces fraud, decrease. Involvement of principal shareholder in management, decrease, audit risk. Branch manager compensation, based on profitability, bad. Internal audit reporting relationship to the board, that's good. Accounting department turnover is low, that's good. Continuing audit relationship, continuing client, that's good. Internal controls over accounting estimates are bad because they understate them. Their loan losses are bad. Their bad debt expense is too low. Response to proposed accounting adjustments, they're open to that. That's good. New unprofitable branch, motivated to minimize their loss. That would be increasing risk. And new computer system, until you learn it, that's not good. Increase risk because there could be a problem with it. All right, simulation 3, I put in there where it asks you to write a list of procedures that they should perform before accepting and what additional procedures should they consider. I put this in there for you to practice with it so you could kind of get used to thinking about what should be included in there as far as planning procedures, planning considerations. TBS 4 is a research question. You can practice that with the software that you get. Basically, you're going through and they're asking you to determine. It says, the company is considering accepting an engagement to perform an audit for a new client whose prior period financial statements have been audited by another CPA. Johnson & Johnson would like to make certain that they understand the auditor's objective in conducting an initial audit engagement. Which title of professional standards addresses this issue and will be helpful in understanding the auditor's objectives? Enter the exact section and paragraph. Now, for auditing, and I'm going to talk about research a little bit later, basically with research, audit has the most choices, right? FAR has 1, accounting standard codifications. Taxes has 2. Here we've got several. So it's important that you understand AU or AUC is clarity, PCOB is public companies, and so on. I'm going to cover this in another area, but it's something that's the list. There's several areas. The first 4 or 5 are the most frequently used. But again, I'll cover that when I go through in detail how to do research questions.